Good morning, my name's Gavin, Head of Sales here at Mortgages for Business, and I'm here with Ashley Jones, our residential mortgage consultant. So in today's episode, we're going to talk a little bit about the residential remortgage market, a market that's kind of growing year on year. And this time, sort of where we were 10 years ago, is probably as competitive, with rates being very, very low. And more clients that we're seeing potentially staying in their properties slightly longer rather than looking to maybe move, maybe extend their properties as their families grow, rather than actually move up the property ladder. So it's worth just sort of getting your views, Ashley, and where you think the mortgage market is.
Yeah, certainly. So I think touching on what you've said there, Gavin, at the moment, with there being a lot of sort of uncertainty around Brexit, we're seeing a lot of people sort of staying in their own homes rather than moving. There's some really competitive rates out there at the moment, so people taking advantage of that, taking further borrowing to maybe do that extension rather than move, or to consolidate some debts that they might have had for a few years, just looking to sort of save on their outgoings.
Okay, so we're seeing the remortgage market being kind of the core of your business at the moment. Lots of clients looking for your help. So what types of deals are most of your clients actually taking up?
I say at the moment we're seeing quite a strong trend towards people going for longer term fixed rates of around 5 years, possibly longer, because again, linking to the current sort of economic situation, but 5 years is sort of the most popular. We're seeing a lot of sort of repayment mortgages as well, but there has been sort of growing trend towards interest only borrowing and part and part repayment, because there's a lot of lenders who have come into that marketplace now, and their lending criteria is slightly more flexible than it was a few years ago.
Okay, so it's an interesting topic, because it used to be that interest only became quite a sort of, you shouldn't be doing that, you shouldn't have done it, and then there was a lot of talk in the market about customers coming to the end of their interest only and not having options available to them. But now lenders are actually loosening criteria, for want of a better phrase, and becoming more accommodating to help customers in those situations.
Yeah, they are. There's as long as you've got sort of a suitable repayment strategy from the outset, such as the equity in your property, or possibly a private pension fund, or a buy-to-let portfolio, and there's significant equity within that, most of the lenders are sort of happy to use that as a repayment strategy. So as you say, they're slightly more flexible in their view on it, and the products are sort of more widely available than they were.
Brilliant. Okay. So for most customers, they kind of think, well, remortgage is fairly straightforward. They've done their first mortgage or second mortgage, and they're now experts at it. So what are the advantages of using a broker like yourself?
Because we're specialists in what we do, we can help to sort of find the most appropriate deal for our clients from the whole of the market, and we'll look at the deal without bias. So we can take a look at the existing lender, appreciate that the client may have had a really good service from them, but if there's something out there which is going to save you a lot of money, we can find it. If there's something which is a little bit unusual or bespoke about what the client's looking for, we can also really help sort of place that based on previous experience, where we may have placed a similar deal in the past.
Okay, fine. And the dangers for a lot of customers is they kind of took their mortgage out 5 years ago or 2 years ago, and then it rolls over onto the lender's standard variable rate, which can cause huge problems. So kind of customer apathy is a real danger in the marketplace. So what should customers be doing, and when, really?
A good thing would be to sort of maybe when you do take your deal out, is just sort of make a note of when actually it does roll off, because as you say, Gavin, a lot of the rates when they go onto the lender's standard variable rate will jump to sort of between 4 and 5%, which can be quite a nasty shock if your deal rolls off onto that, because your payment can increase quite significantly. Other things to sort of think about doing is look at starting the process rolling probably about 3 months before the deal's due to expire. If you have an existing broker, get in touch with them, or do a bit of research and get in touch with a broker. Also, trying to get your documentation in order, that's always helpful, because when you do go through the application process, the more organised you are, the smoother the application will run from end to end.
Okay, so 3 months is kind of where you start thinking, I can get it done, and I can get it done consecutively with the end of your existing mortgage and get it transferred to the new one quite seamlessly.
Yeah, that sort of gives you enough time to sort of allow the application to go through, the valuation, and also the legal transfer paperwork to go through.
So what else should customers be looking out for, maybe on their existing mortgage, to help them understand what's possible and maybe what are the things that you look for on a new mortgage to help?
Yeah, so in terms of their existing mortgage, what's really important is number one is the end date, as we mentioned previously, being aware of that. Also, just being aware of any charges to exit the deal.
So one of the things you mentioned there was the fee. The early redemption charge is probably the terminology or the ERC on the existing paperwork, and it can vary considerably between lenders and each lender. So it may well be a percentage of the loan amount, and it may tear down over the term or the initial term of the mortgage. So it can be quite a sizable fee.
Yeah.
But it's also worth mentioning that as that tapers down, if you're on quite a high rate, there will be a cut-off point where actually paying the penalty may well be advantageous to move to a much better deal.
Yeah, certainly. If you've been tied into a deal for a long period of time, and you feel as though it's quite high compared to interest rates out there, it's always worth looking into it, as you mentioned, because if the fees have tapered down and maybe you're sort of looking at 1.5 or 1% to exit the deal, if you're getting a significantly lower rate, you could be saving yourself thousands over the term of the new product.
That's definitely something you can help with. Yeah?
Oh yes, certainly. Yeah.
Fantastic. So it's probably worth just summing up now. Can you think of a recent example where you've helped a customer in a remortgage situation and talk us through it very briefly?
Yeah. So quite recently we've helped an existing client who we approached sort of 3 months ahead of the end of their deal expiring. They were looking to remortgage and take some additional borrowing to consolidate debts. So having spoken with the existing lender, weren't happy with the deals that were on offer, did a bit of research for them based on their circumstances. We were able to place the deal successfully, and from the point of application to receiving a mortgage offer, it was within 4 working days, so it was nice and speedy for the clients. And it also came with some really great features, with a free valuation, free legal services, and there was actually a cash back as well on the mortgage. So the client actually ended up, with cash in their pocket for doing the remortgage, which sounds crazy, but yeah, so they were very happy.
Fantastic. Okay, so it's definitely worth our customers speaking to you.
Yes.
Some really good deals in the market at the moment. A number of 5-year deals hovering around the sort of 2% mark.
Yeah.
Some even lower if you're looking at a lower loan to value.
Yeah, there are. Yeah.
And some lenders now coming out with some really competitive 10-year deals as well.
There are 10 years out there, and you're sort of seeing pricing at around sort of 2.3%. So
wow,
really competitive there for 10 years as well.
Okay, so the easiest thing for our customers to do is get hold of you as the expert.
Yeah.
So Ashley, how do they do that?
My direct dial is 01732 471 694, or you can drop me an email at ashleyj@mortgagesforbusiness.co.uk.
Brilliant. Thank you, Ashley. Thank you.
Thank you.